The dollar is slowly losing its reserve status. The percentage of dollar holdings in central bank holdings, which has always been the main holders of dollars, is down to a 25-year low just recently.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance. I'm your host, Dunnigan Kaiser.
And I'm Melody Kaiser.
And we're talking with Mary Ann and Pamela Aden, the founders of the Aden Forecast. Today is Wednesday, May 19th, 2021. Pamela and Mary Ann, thank you for coming back on Liberty and Finance.
Oh, it's our pleasure. Thank you for inviting us.
We first got connected with you because you were in the Sprott Natural Resources Symposium last year, and we were delighted to be able to interview with several times with you and get your perspectives on the way things are heading in our major economy, our financial world, our investment pictures. And people are very intrigued about how you two got into this. I know, Melody, you had a question for them about that.
Yes, one of our viewers has asked, who are you? And then the other viewer we had is saying, smart lady. So there are some who are very familiar with you. And one of the questions I had also was, what made you, I think it's unusual, two women getting involved in this business.
Especially 40 years ago, at times being different back then.
Yeah. So tell us how you got started and why you kept doing this.
Well, we actually, it just kind of happened, but we were here living in Costa Rica, and we were working, at one point we started to work for a private investor. And it ended up being like an education in the sense that he had a vast library of books. He taught us a lot. He did a lot of technical analysis. And he said, take whatever books that he would recommend, like don't waste your time on this, do this, and read them on our own time, though. So we really fell in love with what we were doing. And we happened to both work there because first he needed an assistant, then he needed another person. So it was kind of like one of us went to work there than the other. And so we worked there for like 4 years. And so it was literally like being tutored by, he was so unusual in many ways, but so smart. And it was just, that's another story about how it all evolved. And then at one point at the end of the 4 years, we went to work for the only brokerage company in Costa Rica. And in their research department, which was us basically, and a couple of other people. And so we did that, and it just so happened that, I don't know if you remember the name Jerome Smith, who many years ago was the silver guru, like in the 70s and that.
He was on top of his professional life at that moment.
Yes, he had written a bestseller, and he was very, very famous at the time. Well, he comes to Costa Rica to live, and this is all just by chance, and buys the brokerage company that we worked at.
Yeah.
So
he was our boss.
He became our boss. And we were just like, when we heard he was coming to Costa Rica, we were really anxious, hoping we could meet him someday. And here he ends up being our boss. So that's how that happened. And then through Jerome, we got introduced to Jim Blanchard and a lot of other newsletter writers, Chris Weber. And then Jim Blanchard ended up inviting us to the New Orleans Investment Conference, which they still give to this day. And so we went to speak at the conference. We'd never spoken anywhere ever. And so it just kind of one thing happened after another. We wrote a study.
That's right. That's what
kind of, if you want to say, launched us into getting our own newsletter.
We wrote a gold study.
It was a gold study, and people really liked it, and it became very popular. And so from there, a lot of people were asking how they could keep up with our views. And in the meantime, Jerome had sold the company to another group. And so it just was kind of the right time for us to say, well, let's do our own newsletter. So that's how we got started.
That was in 1980.
Wow. That's one of the things that impressed me so much when you were introduced at the Sprott conference was just that you've been doing this idea of analysis of the metals and the equities and all the markets longer than most people who are currently doing it. But you mentioned in a previous interview that you actually innovated some charting techniques and the use of computers in charting that you were groundbreakers in both those areas. There's one of the points that another one of our viewers has asked a question. This is John Cruikshank, and he's looking at the fact that as you guys chart many things, including the spot price of the metals. You talked to us last time about how there's, I believe, entering this mega trend or mega cycle for gold, and he's wondering about the pricing difference, the gap that's forming between the physical price versus the spot price in many of the metals and silver as well. He says, wondering how much of a difference there can be between the spot or paper price and the physical price before there's a revamp in the system.
Well, that's a very good question because, first of all, we always like physical better because whenever push comes to shove, there's a big spread, and there's not enough gold or silver to fulfill everybody all at once, kind of like a bank. And so that, for one has to realize that's a risk in paper, gold, or silver. And so maybe put more in physical and use that more like an easy way of buying and getting in and out. And that's how we see it for that reason. The spreads will continue to widen and come back, and they will. Maybe this is temporary, but as long as there's some sort of crisis coming up and a squeeze, this will happen. And it's happened in other markets too, not just like we used to notice it in the physical, any commodity like copper or like the ETF won't go along with the actual copper price. And you saw these things were off.
Yeah.
And so many times you'll see them off and we don't know why, but it happens. And a lot of times they'll say, oh, wow, and we're in this ETF and we like this and it's going up, but the ETF is not. And
like in the foreign stock markets, remember that?
Yeah, we did that. And like we realized ETFs aren't like foolproof or like paper gold and paper silver. So there is a difference, and it happens in markets. Now it's physical versus paper on gold because it was only in 2005 that we even could buy gold on the stock market. So it's a fairly new thing. And of course, GLD became the number one go-to for an ETF for gold. But we like Sprott, and Sprott says, because the whole thing about an ETF is, do they really have the gold for your account? Is your account really saying you have a numbered gold piece in their vault? We know they have a vault, we know they have gold, but do they have enough for all the people? And so that's always the question, and it always will be the question.
Yeah, and that's right now very much in the news because we've been talking to Wall Street Silver and other groups which are encouraging people to switch out of unallocated or pooled accounts and get into physical funds like you mentioned, Sprott. So in other words, like selling SLV to buy PSLV or selling GLD to buy PHYS. So you end up owning something that actually has the physical gold or silver 1-for-1 behind what you're, or actually hold it in your hand.
Yes.
We've had these conflicting stories from different analysts and guests on talking about, is there or isn't there inflation? The Fed has been saying there's not enough. We've had other headline guests saying, the way that the Fed measures it, there's not much inflation going on. That's counter to a lot of the stories we're hearing from individuals. You had a question.
And Juan Gonzalez is asking, what are the expectations for Fed rate increases as the reported rate of inflation is starting to go up? What do you guys think about that?
Well, we'll both say something on it, but I would like to say the rise in commodities especially since last quarter of last year, has been spectacular based on demand, and that the dollar was weaker. We can't forget that. The dollar was weaker. There was a need for all this. There's so much construction globally, and it continues. It never really died down in some countries, like we see it here. And like everyone's building something, and the housing boom, it has housing shortage. And so this ongoing boom in construction, we think, is going to continue, and what's going to fuel the commodity market, actually, and the resource sector. And this is something very exciting. And then if Biden's plan comes through on infrastructure, then definitely the the rising prices will continue. So you can say food's rising, agriculture is rising, all the commodities are rising, so you're paying more in your grocery store, you're paying more tuition at a university, you're paying more of everything, but where's the inflation? And
well, I'd like to add something there, is that the prices are rising, but by big double-digit gains. I mean, as far as you look at the individual commodities, but the consumer price and the producer prices, which are the popular inflation indexes, they're bouncing up now, just starting to show their biggest jumps in like 8-9 years. So we're starting to see it. It's in the pipeline, and it's just starting to become not super obvious yet, unless you notice prices going up in the supermarket and at the gas station. But in the indexes, we are seeing it. And for the other part of your question, we think inflation is going to probably surprise a lot of people on the upside. We think it's already set in stone, if you want to put it that way, because of these huge price rises we're seeing in just about everything, and especially because of the huge money creation the Fed has done. So to answer the part about interest rates, the Fed does not want interest rates to go up. They've said so many times they're keeping them at zero, kind of come hell or high water. But if inflation gets really bad, at some point they will have to up the interest rate. But we think they'll hold off as long as they can.
You mentioned, both of you, about the dollar decline. In fact, as how that affects the apparent price of everything going up is partly because you're measuring it in a shrinking dollar. You mentioned that last time that we spoke with you. You talked about you expect the dollar has been declining and will continue to decline. We have a question from Slappy Nog, who says, with the Dixie, the dollar index, falling to 89.8 this week, what level does the dollar need to slide to act as rocket fuel for precious metals?
Well, the rocket fuel's already getting started, and it actually started before the dollar really fell, and this was like gold really started heating up like a year, almost 2 years ago now. Like the bull market from 2015 to 2018 was kind of quiet and not thrilling, but it started. It came up, and now with the uncertainty, it's even better. And like now, it's coming back to test 1900 right this moment with this rise since March. So we're feeling very good about it. And so, rocketing. We think the dollar, if it breaks its low, which it's getting very close to the January low, we could definitely see that giving it an extra boost, because we see a leg down coming up in the dollar, and this is just the start of it. And so not that we're not a gloom and doomer. We would love everything to be great, but we just see that's what we see. And the confirm would be if it hits a new low. Yeah.
Another question, Fat Vegan is asking, what is the biggest threat to the U.S. dollar and the U.S. economy right now?
Well, the biggest threat to the dollar, I think, is that the U.S. is the world's largest debtor nation. And the U.S. is just so much spending like mad, money it doesn't have that's being created. And that's what's breaking the dollar down. If you want to put what's the main reason, there's a lot of reasons. But the dollar is, I mean, it's not like Pam said, we don't like saying this, and we don't like being the bearers of bad news. But the dollar is slowly losing its reserve status. And more central banks are moving out of dollars, and they're buying gold instead, or diversifying into other currencies. And so the percentage of dollar holdings in central bank holdings, which has always been the main holders of dollars, is down to a 25-year low just recently. And so we're seeing a steady erosion on many fronts. But I would say if you had to pinpoint one thing, it's the debt, the huge deficit spending and the massive debt buildup that's just going crazy.
But then you also have to ask, what's the alternative? Like, what's the alternative to a reserve currency? Like, China would love to think it's them, and they're striving for that. And like you read a lot about China and Russia trying to go around the dollar and do things directly with their currencies together, and doing it with other countries. to try and sidestep the dollar. And they are, we don't know how much they're doing, but you know that's a plan they like, and they would like to do that. And in the meantime, I don't know what kind of influence this is going to have on the Bitcoin world, but China is starting a digital coin. And in fact, that's what made Bitcoin fall so much today, and by chance. But we already saw that it's been coming down. Anyway, the whole thing is that probably the dollar will eventually become a digital currency too. Like we can foresee that easily to keep the competition. And because the U.S. gets a lot out of being a reserve currency, they can do what they want where other countries cannot. We see that clearly living outside of the U.S. is that they get to do so much more than anyone else can and get away with it, right? And not get away with it, that's not the right word, because because it is a privilege.
Right.
But this is what we see, that is eroding. It's not over, and the dollar can continue for a long time this way. And the alternative, who knows what that would be? Partly maybe gold, but not totally. And so we just are watching it closely.
When you mentioned the runaway spending and debting of the U.S. being a direct destructive force that's affecting the dollar, that is not unique to the U.S. We had the IMF head a couple of months ago, and we'll put a link to this article in the description of the video, exhorting all nations to spend as much as you can and then spend some more. So it's like, well, wait a minute, if any individual does that, we know what happens, or any household. So it doesn't look good for the futures of individual sovereign nations if they're being exhorted by this world IMF to spend themselves into oblivion. No. There's a question related to that from Brian Jenkins. He says, will Costa Rica end up accepting the IMF conditions for a loan? How will that impact you and your country?
Oh, that's a good question. I think they probably will end up accepting them because they kind of have to. You know, if they don't, there's a risk that, you know, the economy could really be hard hit here in Costa Rica. So I think they will. And again, and if they do, it'll help keep things afloat. And to your point, it's true. The COVID economies of the world have all been hard hit, and they've all been spending and doing what they have to do. The developed nations spend, the developing countries follow whatever the IMF tells them what to do. And so it's kind of like everyone's trying to do what they can to keep their economies propped up. So
they're really in between a rock and a hard place. It's really a hard thing for emerging countries to be able to try and stay like they are. So this is going to continue. It's because they are limited to what they can do, and especially countries like Costa Rica that are tourist related. But in the meantime, you see all this construction going on. We see high rises going up. We see the roads getting better. It hasn't stopped. So there's a lot of money that's come down here that's not government money. And so that's an interesting thing that's going on right now, is that a lot of money, like we see it in the beach areas especially, and especially one beach, a lot of tech people are coming down and they have millions to spend. So we're seeing that happening here, just like you see in the States where they're buying like the suburbs, and they're buying here too.
One of the reasons in the U.S. there's called urban flight. A lot of people are leaving states that have had repressive lockdown policies, and they're fleeing to states where there's been more freedom. Can you tell us a little bit about that for people who may be interested? Is Costa Rica what is the freedom like there, as opposed to when you've come back to the U.S. to visit, or you've heard correspondence with people who are living here, so that people are aware of that?
Well, you feel like there's a lot of freedom here. In general, it's a democratic nation. And of course, I mean, there's laws and there's things you can and can't do. But their general freedom feeling, I mean, it's good. It's positive. And I think, like Pam was saying, all those boom towns is really a lot of the people that are fleeing the cities in the U.S. or in Canada or in Europe are all coming to some of these beach towns in Costa Rica and realizing they could work there just fine. They're putting their kids, checking out schools putting their kids in the schools, getting like settling in to live like at least half the year is probably what most of the new buyers that are just pouring in are doing.
Yeah,
So that's another interesting thing, because people with COVID realize, gee, I could work from home and it's okay. And home can be on a beautiful beach in Costa Rica, or it can be wherever. So
yeah, and we're 2.5 hours from Miami, 3 hours from Texas.
Yeah.
Like a flight, it's a one flight to many cities. In fact, right now there's a direct flight from Charlotte, North Carolina, of all things. I mean, just to point out that that is happening. I mean,
Yes.
a lot of flight. There's a direct flight to LA that's 5 hours. So yeah, we're close. We're kind of like in the middle of the states, if you want to think of it, below Texas. But to answer your question about going there, like for us to go there and get on the plane, you have to show that you don't have COVID, that you just got the test. And that's the only thing that's required to go into the States, other than if someone is not a U.S. citizen, their visa and that. And then coming down, they have to buy an insurance from the Costa Rica government, just in case. They're not asking for a COVID proof, but if they get COVID down here, they'll have the insurance to pay for their
hospital.
Yeah,
The care,
and then
okay.
and then the airlines requires everyone to get a test of COVID to get back on the airline to go home. So that's the deal right now.
Okay, that's great that there's not a ban or anything, because that can really, be hurtful to families wanting to see each other in different countries.
Right.
You mentioned how you study charts, you study trends, you watch for ratios between things on charts. You talked to us in the past about the gold-silver ratio, and some people are still watching that very closely. They're saying we're still far from the average in terms of gold being overvalued relative to silver, or silver being relatively inexpensive compared to gold. Question from Fred Kruger.
Right, and he's asking, would you convert 50% of your gold holdings to silver if you already hold 25% of your precious metals in silver?
Well, that's a good question. Yes, right now, in fact, you probably noticed that silver hasn't been rising as much as gold this last few weeks, but definitely silver has everything in its favor to continue outperforming gold going over the next few years. Like certainly all that fluff, the excess of it being totally undervalued, was erased with the big jump it had since last summer, but even so, it's still undervalued versus gold. It's a great value versus gold. So yes, if you want to put more in silver and take some of your gold and put it into silver, it's not a bad idea.
It's a good idea.
Yeah, it's a good idea.
So you're thinking silver is probably going to outperform gold.
Yes.
But yes, over the coming years, upcoming now and next year and the year after, yes.
Now, in the past, when we interviewed you, you talked about mega trends and the big picture. So we haven't really given you a chance, but can you zoom out now to what are the most important themes that are emerging from the analysis that you're doing that you think people need to be aware of and keep their eye on going forward? What are you keeping your eye on that you think is most significant?
Well, the one we think is the most significant is the mega trend in the gold price. And we think it's probably going to keep going up for at least the next few years, probably 5 years or so, 4 or 5 years more. So that's what we call a mega trend. It started actually 5 years ago in December 2015. But the beginning of a trend in any market, as you probably know, usually starts out gradually and then it really starts to pick up steam. I mean, you can think of the stock market, for example. Its mega trend has been up since, 2009 for sure. And really, because it's only has, and so
not even 20%.
But the gold price has been building up steam. It keeps showing its strength, and it's not so subtle anymore. Silver's even better. But those are the big trends that we think will be the big, not only the money makers, but ways to protect your wealth from the inflation we foresee coming and the dollar deterioration. And it's just a great way to preserve capital and profit too.
Yeah, and another I'd like to add is the resource sector. We think that's got a great potential, just like gold does. And copper was like the leader but because everyone knows it so well compared to the other metals, like it's not exciting to say tin soaring, but but it did. And but copper is showing us the way right now. In fact, it just got away too. It rose too much. It's it over doubled, and it now needs to have a rest and a downward correction. But this correction that we think is coming right now, this is looking at a big picture, but it happens to be now, and we think that there's certain resource companies that will greatly benefit from this rise. So this is what we're looking to buy into more, because we have some during upcoming weakness, just because it's just have to have a normal downward correction while gold rises, because they're kind of been in that off and on. But that also gives an extra force to gold, because it's all the commodities moving up. Right. Same with corn, same with lumber, of course, has been off the charts. Like iron and steel have been incredibly off the charts. Like they're all very strong, and they're due for a correction, but we're looking for that correction to really start buying more.
The last time we had you on again was before and after the Sprott conference last year. The Sprott conference is coming up again in 2 months. Now Rick Rule, no longer the CEO of Sprott Asset Management, but now of Rule Investment Media. Wondering, with this virtual and travel and all that, are you two going to be able to attend this upcoming conference?
We're not sure yet. Like we've been mainly we don't attend that many conferences or speak at that many. We have been speaking this past year or more at the Money Show.
But only online. We've only
online.
We love online.
No, it's really nice. And we are planning for sure to go to the New Orleans conference this fall, that they're going to have it in person again.
Oh.
So, yeah. So the Sprott one, we're not sure yet.
Just two more questions. What is your outlook about interest rates and also bonds?
Okay, well, bonds have been very interesting. Well, as you know, and everyone knows, it's the reciprocal. It's the other side of the coin of interest rates. And so the bond market has been actually, since 1980 peak, it's been actually following gold, and especially in the last 5 or 7 years, we've been seeing the unusual partners of gold and bonds moving together in lockstep. It's crazy, and it's still doing it. In fact, with this rise in gold, we're looking at seeing that bonds are ready to rise, and interest rates, long rates, are starting to need a downward correction. They just rose too fast, and it doesn't mean we rose too fast from super low to still super low, right? But still, it affects everyone. But the mortgage rates have been dragging, and that's interesting. And Freddie and Mac is also they're softer than the 30-year yield or that. So anyway, we are still looking at that relationship. It's still going on. So we think that's a very interesting thing that I don't know if many people realize. It's been going on for a long time, and we think it has to do with safety. Like they become more like safety type of market. So we're seeing that. We're seeing that happen right now. But we, like Myrn had mentioned before, we think low rates are going to stay low. The Fed's going to make sure they stay near zero. And if you look at the real T-bill rate, you're looking at almost minus 5%, especially with just the latest April CPI that came out that was strong. If you take that into consideration, you're looking at T-bills now, the real T-bill rate, minus 4.65, if you want to be exact. And it's just insane. So you're seeing T-bills at zero, real T-bills minus 5. And this is what we're seeing. It's really a big fall. And we think this is going to stay. And this is excellent for gold. This is a super environment for the gold price, is to see this. And the long rate wants to rise, but the Fed also has some, because they can also manage the long rate, not as much as the T-bill, but it won't go so high. It looks like it's still they can't afford for it to go too high. And so we see rates being moderate over the next few years.
Yep.
And then now our last one is just wanting to let people know, how can they get a hold of you? How can they find your work?
Oh, thank you. Well, we have a website called adenforecast.com. And if you want to write to us, we'd be happy to give us a free issue. We just finished, actually. And it's at info@adenforecast.com. And we're happy to, any of your readers will send it off.
Oh, that's wonderful. Thank you.
Also, folks, if you don't want to lose track of us or any of our guests, including Pamela and Marianne Aden, make sure you go to libertyandfinance.com. Over in the left-hand margin, you'll be able to put in your name and email address and sign up for our free newsletter so that we send out all of the links to all of our guests with any of the resources and links that they provide with full descriptions of all of our videos. And that's at libertyandfinance.com. So we've been speaking with Pamela and Marianne Aden, founders of the Aden Forecast, and just grateful again on behalf of all of our viewers for your presence here on Liberty and Finance.
It's a
Thank
pleasure.
you very much. It is a true pleasure.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.